Thank you for the introduction, and I want to welcome all my panelists to this discussion. To begin with, Ms. Subramanian ji, I know it's your birthday today, so first of all, a very happy birthday, and thank you for joining us.
Thank you so much.
Happy birthday.
Great. So we're going to celebrate it here with this discussion. I want to straightway dive into my first question to Mr. Parekh. So we have seen that over the years, the CFO's role has gotten more complex. So I want to understand from all of you, beginning with you, that how has the role of a CFO evolved if we look at the last 5 years? Has it become more complex than ever?
Yeah, good morning all. So I certainly agree, Ruel, that the role of CFO over a period of time has evolved and has become more and more challenging, complex, with the kind of regulatory changes, the kind of complexity of business, the kind of competitive pressures, the evolving corporate governance role, corporate social responsibility of the business, and larger and larger accountability expected by regulatory agencies, including SEBI, from the listed public enterprises. So I think, yes, there have been a significant shift in terms of the demanding role of CFOs, but at the same time, most of us as CFOs have taken that this journey is always going to remain in terms of governance northwards and never southwards, and therefore you have to accept this new order and rise to the occasion, get equipped, and ensure that we do our role both as a business partner as well as a custodian of corporate interest.
Right. Ms. Subramanian, how much do you agree with this? And also, there's a period of transition for CFOs as they assume new responsibilities. Give me a sense of the complexity of the current CFO's role.
Yeah. So firstly, your first question on do I agree with what Mr. Parekh has said? While I largely do agree with what he's saying about the responsibilities of the CFO, etc., I would think in an insurance context, the regulator and the general regulation has been extremely progressive. And it's sort of surprised, us, especially in these times of pandemic, where people have been getting very petrified by the whole thing. Are they going to be eligible for a claim settlement in the period of COVID? Because it's not a precondition in anybody's, insurance policy. They've been very quick to sort of make changes and amendments to say that, yes, it's included. Similarly, you could stay at home and you could do an eKYC, you could get all your medicals, etc. done and sent the documents. So they have sort of enabled the insurance companies in multiple ways in the last year or so. It's really heartening. It has helped the general public at large, both in the life insurance space as well as the general insurance space. So that's really nice. They've also come up with several products which they've sort of made compulsory, like the standard life product, etc., standard term life product, etc., which also has helped to, one, bring the sales of the term higher, and it has helped people who have not been insured earlier on to sort of get them into the insurance net. So from a regulation perspective, I think I am just very pleased that they have been, they have been cautious, of course, to bring new regulation. But at the same time, they have been extremely progressive. So I think that answers your first question. The second one, in terms of what does it feel to be, a CFO in these times? I would think more than any other sort of an industry, the life insurance industry is sort of hit by the whole pandemic, more than anyone, for two reasons. One is, of course, the demand, the doing business, etc., and the business continuity, being able to meet customers, etc., is really difficult and challenging. And I guess that is very similar to other industries. But what sort of sets the insurance industry apart is the fact that the claims in the second wave have been really high. And so it brings up a whole challenge in terms of solvency requirements. Will the companies be able to be afloat, given that claims are literally 4 to 5 times higher than they were in any other time? So, from a CFO's sort of perspective, I think it brings in many skills, to play. One is to be able to forecast these claims effectively. So, a good claims forecasting model, which is able to use the statistics of deaths that are there in the country, and then sort of, marry that with your own company's portfolio, and then ensure that you're able to sort of assess where we are in the in the whole picture. uh, Various other levers to sort of improve profitability, because that becomes very essential. The whole capital situation, and the solvency, which is also a challenge. You have to keep monitoring the the solvency. You have to get digitally very enabled, and you have to adopt, if already you have been doing that, you have to be much faster, because that's the way you could get your cost pressures down. So I think a CFO's part in each of these areas is extremely important, and you have to stay completely engaged in order to be able to sort of help the company get through.
Mr. Swaminathan, since we're talking about the evolving role of CFO, and my question was, I want to go a little back in the time and understand that over the last 5 years, how has this role evolved, and has it finally come to a point where it has become more complex than ever? What is your take on that?
Firstly, thank you for having me on. Insofar as the regulatory environment is concerned, new rules and regulations across regional, national, and international borders continue to intensify. No matter how large, small, or diversified your organization is, almost every part of it is touched by a complex web of constantly evolving regulations. And non-compliance is subject to enforcement actions and penalties, not to speak of damage to reputational risk and the like. It's not surprising that the CEOs across the globe are more focused on managing risk than ever before, and so are the boards. But I also find three trends in the recent times which kind of make things a little more easier. The first, of course, is a trend to enhance harmonization and bring in a lot of transparency initiatives. So let me talk about, for example, this minimum global tax for multinational enterprises. Much before that, there was this OECD points which tried to harmonize on tax initiatives across the globe. When you speak about a pharma perspective, pharma inspection which actually aims at harmonizing inspection procedures worldwide by developing common standards in the field of GMP. The second big trend that I'm also noticing is the trust towards ease of doing business. So we speak about countries, states competing with each other to retain investments. So we talk about single window clearances, multiple approvals coming through a SPOC and the like. We also speak about convenience in terms of faceless assessments, online reporting, and the like. The third most important thing which seems to be happening across the globe, for sure in India, is the ubiquitous endorsement of technology. This has happened more in pandemic times. The pandemic has resulted in increased focus on digital operations, resilience, and continuity in carrying out the day-to-day operations. This actually means that there's increased focus on digital transformation, enhancing the approach to meet compliance obligations, and effectively addressing risk. So I would say, things have certainly become a lot more complex, but there's also an attempt being made by various regulators and governments to make things easier for business to continue to do business itself. They're not being caged by right. The multitude of compliances, so to speak.
Right. Great. That brings me to another where you touch upon the regulatory part of it. It also brings me to my next question, which I'll start with Mr. Parekh. So if you look at the regulatory environment that surrounds the financial system, has it become more strict? Are there Are there opportunity? Are there chances, or there are spaces which can be improved upon? What is your take on the regulatory framework that surrounds the functioning of the financial, kind of procedures?
Yeah, so at the corporate world, I think in the last 5-6 years, number of new things, new legislations have come, starting with Companies Act 2013. Then we have internal control over financial reporting. We have Ind AS, and we have then GST in 17. And we also know that task force is there working on income tax, new legislation. So yeah, number of changes have come, and we have increased the role now expected in terms of corporate social responsibility. But somewhere I would also believe that while corporate governance is certainly very important, there is possibly a need of balancing this, the corporate governance role and strict regulations and ease of doing business. While Ramesh did mention about improvement in the score, and I certainly agree that in last 5 years, India has made a lot of progress in terms of ease of doing business rank. But as per the latest World Bank report that I could glance through, India still as the position number 63, and if you compare this with Russia, which is on 28, and China, which is on 31. Right, so there is still a progress which is possible, but directionally we are on that line. There have been several legislations, and I believe that some move in terms of harmonizing. While, as Ramesh mentioned, something is already done, more can be done in terms of harmonization, various legislations, revisiting some of them, in fact reducing some of the legislations, or avoiding some of them, or merging some of them, scrapping some of them. Like, all these things are simplifying this. All these things are possible because if you look at the number of rules, regulations, and compliance to be done, it's enormous. Last week only I was discussing my legal person, and he was telling me that Nitin bhai, right now we have some 48,000 line items which we are monitoring. 48,000, right? So by any standard, I think we have still need to come a long way in this, and there is a scope.
Right. Ms. Subramanian, give me your sense of how you look at the current regulatory environment. Do you think it is enough, or it is over restrictive? I mean, what is your take on it?
I wouldn't think it is over restrictive. Definitely not from the industry that I come from, specifically because, like I said, in the last 10 odd years in insurance, the scale and the pace of technological innovation, it has been extremely fast. While it's given various opportunities to the insurers to do better, simply because of this whole cost pressure, the whole one-touch claims, or the straight-through processing, etc., that we do, it is amenable, or it is susceptible to a lot of fraud and errors, etc. So I would think that it is it's really good that the regulator is quite serious and restrictive in the way they look at all the digital adoption and technology that insurance companies are looking at. But having said that, on the other side, there are still a lot of things where they haven't yet sort of put their finger on, or sort of given it enough thought. One big thing that I would think is sort of missing would be, as you know, most of the insurance companies, the big source of income is really the investment income, the premiums that they collect from policyholders, and how they are able to deploy this money. And in a regime where the interest rates have been falling in the last couple of years, there is a pressure on bottom line of various insurers. And they're not allowed to, they are allowed to hedge, but there are not enough derivative instruments that they're allowed to for hedging. they're not allowed to do equity hedging. They're not allowed to, invest. Maybe the rates are not so good for debt outside of India, but at least the equity, maybe they should be able to allow. The exposure that they're allowed to alternative investments is very restricted. So, overall, all put together, the whole bit on hedging of the P&L or the protection of the P&L, I think that's an aspect where they are quite cautious right now and sort of over restrictive in that sense. But that is an area which, if we're able to sort of imbibe from what is there in say a country like US, where there are enough derivative instruments available to sort of be able to hedge your income, I think it will go a long way in being able to price the products to the customer, and it will be the policy holder which will actually benefit at the end of the whole thing. But I think this just needs a little more thought into how it's done, etc. The other area I would think is definitely the adoption of IFRS. Though we have something called an Ind AS, it is not sort of formally adopted. And if you need to compare how an insurance company is doing versus a banking or versus any other peer outside of India, it is just essential that we are all using a uniform sort of accounting framework, which will allow us to sort of one, we will be able to learn better in terms of what they're doing and how we can do better, and also it allows for a sort of an equitable comparison. Somehow it's been adopted in parts. It has not been fully adopted on the liability side, though it has been on the asset side. So there are various versions and stop start, etc., that we've been doing. But I would imagine that's a very important regulation, and maybe we should sort of bring it in. And the last but not the least is the number of things that we are supposed to report on, and the number of regulations that sort of catch you from all sides. It's just amazing how we are still able to sort of chug along with so much reporting that we currently do. Yeah, and especially like an insurance company, it's highly regulated. Everything is regulated and everything has to be reported on. So it's just phenomenal amount of reporting. If while I understand the positive of it, maybe it could be a little tempered down so that it sort of helps the overall environment of
right.
Yeah.
No, brilliantly. I think totally. I mean, thanks for sharing this detailed insight. And I want to jump over to Mr. Swaminathan for your comment on how do you view the regulatory environment that we are in?
Very interesting questions. From my perspective, the complexity is only growing because there is growing recognition by the government also that the data is the new oil. Government across the world is actually moving towards transaction level real-time reporting. You look at the GST itself, e-invoicing and so on. So the kind of data that is being available to them is incredible. Added to that is, in fact, the cooperation between regulator, various regulators, departments, and the government, and amongst and intergovernment as well. The linkage is being built across regulatory authorities and automatic sharing of information, as in the case of say tax departments with SEBI and with corporate affairs and the like. It actually makes things a lot more, from a government perspective. It enables them to kind of be on top of data to kind of control things a lot better, but also requires a CFO to be on top of the information that the transaction level information that he is providing to the government. There's a lot more macroeconomic considerations that are driving, in fact, compliance when it comes to the government. So I can understand from their perspective that actually puts the onus back on the CFO, on the respective companies. Now, added to that is this pursuit of ESG solutions as well. And ESG is hot in terms of every part of the globe, including India. The US, for example, passed the ESG Disclosure Simplification Act and the like. And there is no company in the world in which can actually ignore this today. There's, of course, a standardization taxonomy to classify products as sustainable, as well as harmonized methodologies to identify and measure sustainability risk. There's, of course, another move towards disclosure in terms of integrated thinking and the like. All of this actually makes things a lot more interesting for sure, and complex as well. Now, sitting on top of this, of course, is consumer client protection, data privacy and the like. So you speak about GDPR, which is EU, and a very similar thing coming into India. You have FCPA, the Foreign Corrupt Practices Act, to prevent businesses for getting business by all means. All of this is, all comes from the fact that there's so much of data available for government to see through, and that means that the onus is back on the business to make sure that you are on top of things, that you don't allow things to slip by. Does it actually mean things are can't become much better from a regulatory perspective? I think there's a lot of action which I think regulators will have to work on. From my perspective, I think their own ability to kind of handle multiple truths and multiple versions of the truth, that's going to be extremely important. I would also say that regulators, instead of focusing on prescribing processes or actions, should focus on outcomes that they would require firms to achieve. That actually mean moving away from more into principle-based regulation rather than rule-based. For you to recognize rules are at best a good guesstimate into the future, and they're not perfectly congruent with their purpose all the time. And it really depends on there's a shared understanding of the rule itself, and there could be several interpretations of that. How a rule affects behavior is not dependent solely on the rule itself. It's dependent on so many perspectives around it. So all of these could potentially be a way forward in terms of the way the regulatory framework itself could adjust or be adjusted to make things a lot more easier for the business. And for example, IFRS, we have this the way FASB is being operated in America, which is more rule-based. I would think a principle-based approach would be certainly important.
Mr. Parekh, you heard all your fellow panelists speak over it. Tell me, what is the critical part? Is that how do we encourage a balanced regulatory system? How do we ensure that we create one?
So first of all, this is quite a tall ask, in the sense that how government and corporates can work together and understand each other's issues and expectations, and then strike a balance which is acceptable to both. But if I go by the mutuality of roles and responsibility as equitable and fairness angle, then I think it's quite in order to say that why should only government decide what corporate should do? Why not corporate be also part of the entire process of deciding this? So there can be good consultation with the industry, and I'm not saying that there is no consultation. For example, various committees have been decided with the chairmanship of some industrialists, like for example Kumar Mangalam Birla Committee for Corporate Governance. So it is there, but what can be done is that rather than circulating the draft guidelines for public opinion, if larger trade bodies or associations are made part of that exercise itself in terms of what should be done, and then decide how do you decide the, let's say, next 5 years roadmap in terms of ease of doing business, and there various other agencies should come into picture. For example, SEBI appointing some committee on corporate governance, and then finance ministry appointing some committee on tax reforms, and then Ministry of Corporate Affairs appointing companies like simplification. And then many of them actually don't talk to each other, in the sense that they don't go on same principle as to what is the ultimate aim. How do you want businesses to ultimately function, and where they draw the line that these are the absolutely must governing guidelines which they need to meet. So once that kind of roadmap is there, I think better balance can be certainly there. And in that process, while there is a movement which is recently now being talked about by Honorable Finance Minister, but while it was earlier also talked about that we will not do anything which is retrospective in nature, in some form or other, we have been, again tempted to do that. And then, we get the back, less of that. And then we again revisit the subject and say, we'll not do it again. So even, and then, something comes in the form of retrospective, not telling it retrospective, but in effect retrospective, including, let's say, in the Amendment Act to 2021, in terms of treatment of goodwill or depreciation not being allowed. Right now, many companies might have done, amended deals just, 1 year before, 2 years before, and already considered certain tax benefit as a part of the overall value proposition. And then after, if the government says that now they are not available, from year and onwards, where the benefits are still to accrue in future, I think it changes the whole equation. So my, since if you ask me what can be done, is to bring industry bodies and government department. When I say government department, I'm not talking one department. I'm saying government as a overall authority, and say, what do you want to do in various things? Whether you talk of Companies Act, you talk of taxation, you talk of GST, you talk of, disclosure, you talk of accounts. Talk everything together and then decide the roadmap. And then don't keep on tempering it with, bring the stability thereafter, because business don't need too many frequent changes. The role, while the complexity is increasing and we have to every time say, what is the new listing requirement? What is the amendment or new circular of income tax? Why do you want, people to keep on every time learning? Unless something becomes absolutely must, I agree that, it cannot remain static, but why can't we decide next 5 years roadmap into what all is to be achieved, and then take the industry in confidence and then keep rolling out this? I think that will be much better, balance between restriction and autonomy of business, and ultimately help in terms of ease of doing business.
Great. Ms. Subramanian, your thoughts?
I have to agree with literally everything that he's said. I mean, most of what he said is what I would have sort of wanted to say. It's really true that, it is not enough that the government has to keep asking us what are the things that we need changes on. It has to be a consultative process. And to a great extent, I think from an endeavor perspective, that is how the regulator is sort of organized. At least in insurance, we have something called a Life Insurance Council. You have something called a General Insurance Council, who basically take the representations of the company, various companies, form a view. Most of these working committees on various regulations that need to be passed go through these councils, and that's how they go to the regulator and then to, the various bodies within the government. But somehow I think it doesn't, carry the amount of weight that it could. And maybe they are not as successful as, you want them to be. And that couldn't be only by design. It is possible that the understanding of the problems that the industry is facing is not exactly understood well enough. So I don't know if it helps to have industry representation in the board of the regulator, so that they have a better understanding of the problems that are faced on the ground. Many times there are representations that are made. It is looked at in the light of the overall, strengthening of the, control environment, etc. And many things sort of, are not let through. So maybe industry representation would help. Really, what we're trying to achieve here is that whatever problems the industry is facing is sort of understood better by the regulator and the government, and therefore they're able to sort of help facilitate it better. So I think that's one. The other thing I definitely sort of want to bring out is some things like, for example, the 74% that has come in for insurance as an FDI. It's been a great step that has been taken. It took almost 2-3 years of going back and forth before it actually got approved. And in the midst, from the time this is being lobbied by the industry versus when it actually got done, I think there are several promoters where they have had, crisis situations, working capital difficulties, because insurance is a very capital intensive sort of an industry. So, how do you ensure that it gets, faster on the ground? I think that's a question that I still have, and it is only through this consultative process and through better representation of the industry, I think that such things can be achieved. That's
Right, right. At this point, Mr. Swaminathan, quickly your response, and I have my last question. We have 10 minutes left. How do we make this regulatory framework less complex and more balanced?
All that the preceding two panelists spoke about, I also agree. One is, of course, collaboration, and there should be consistency. Apart from that, I would also say three further things. Three more things. One is, I think you should go about trying to eliminate this greed culture and bring in a more moral compass that would help our framework. We need to bring this trust back to our corporations, and from the consumer perspective. I know this is utopia, but that I think would be very important from a long-term perspective, and that would actually mean it is a power of competition which will bring about this change in culture. I'd argue that we need to need the boards to take back control to drive cultural integrity, ensuring the highest level of ethics and instill practice of strict compliance with the law, regulations, and code of conduct when it comes to the individual corporations itself. That I think would be extremely important. But from a regulated perspective, I would also say that, and I spoke about it a few minutes ago, when I said that instead of having rule-based, compliance systems, frameworks, we need to go for a principle-based one, because as I said, rule-based actually suffers from a lot of, ills. There are a lot of problems associated with it, the least of which is essentially, it is pretty subjective to interpretations, never congruent to the context. And it's at very best, it's just an estimate into the future. So I would rather go for principle-based, compliance frameworks. I know it's all of this are evolving, and the governments, when they actually frame the regulations, it's based again on the principle of maximum good. But it's going to be a long way before we get to that. But until then, we will have to suffer what we do.
Finally, I have another 8 minutes. My last question, starting with Mr. Parekh, the same order. How can CFOs embrace a digital culture to future-proof their business, and especially in an uncertain time like we are in?
So I think digital is very important, and we have been looking at many, now success stories in all the functions. If I talk about, let's say, pharma, from manufacturing side to marketing to HR, financial processes, various things have been, now considered for digital, revolutions. There have been cases where, predictive or prescriptive, power is used of digital in terms of, let's say, machine breakdown, in terms of when certain, machines should be taken for, setting or, taken under planned maintenance. In marketing, we're doing a lot many things. For example, about 6,500 our medical, field staff are all now using, tablets, which are all, centrally controlled in terms of pushing various information related to products, promotions, etc. They're able to, do e-detailing now, with the doctors, and, take their, comments, suggestions for products, usages, features, pricing, whatever. Rather than, keeping this in terms of, MRs taking in their, notes and then, sending it. I think there's a lot of power in terms of, collating this information for better analysis. We have been also, doing some kind of such success stories and pilot plans in terms of understanding from HR angle, let's say, if I talk, so attrition rates and the reasons for attrition, whether there are any kind of seasonality elements. For example, when the absenteeism in certain plants increases, what is the connection with the local festivals or any marriage seasons onwards? Now, some people can say that didn't we know this? Many of these, many of this we know, but we did not have real backing of data to support and then take care of the preventive actions, or take certain planned actions in considering that there is going to be some absenteeism, how do we use, some more contract, employees during that period to see that, you don't lose the product. Many things are being done. We have recently, gone for shared services for our financial, operations, gone for vendor invoice management, automatic bank reconciliation onwards. I think very exciting times. And I believe that in times to come, more and more such things would get, which are of programmable or routine nature, would get, this kind of automation, simplification, rationalization, and maybe outsourcing.
Perfect. Ms. Subramanian, your quick thoughts.
I think I'd like to amend the question. I think this digital enablement is something that most CFOs are already sort of on that journey. I think it will be, I think there is no survival really without sort of jumping onto the whole digital adoption. It's a part and parcel of how we do business. It's important from an operational improvement perspective. The amount of data and data analytics that we pull out, especially in our current pandemic, for claims analytics to understand how our claims will develop as we go along, to do stress scenarios to see what will we end up with from a solvency perspective, or how much claims will we actually be paying by the end of the year, and how will this pandemic wave 2, wave 3, how will that sort of pan out. So all of those questions will involve a lot of data analytics, and it is important therefore that a lot of the processes are automated. So even within our company, a large part of finance, for example, is automated. There are RPAs that are run as well. So from that perspective, I think we are, at least in my understanding, we are quite digitally enabled, both from an analytics perspective as well as from an automation perspective. But I think the journey doesn't stop here. I think this is the most important thing to sort of focus on. And clearly the pandemic has taught us a lot from that perspective, that it is impossible to sort of survive without enough digital technology focus. And even if it were not so earlier, now I think because of the cost advantages that it has shown during the pandemic, I think some of this will sort of continue as we go along.
And finally, Mr. Swaminathan, your take on this. How can CMOs embrace more digital, a better digital culture and future-proof the business?
The panelists spoke about several aspects of the digital transformation that most companies are undertaking. For sure, the touch points are several. You actually work on several aspects of bringing in efficiency in processes and of course improving the overall productivity in companies and processes. There's of course the issue relating to touch points with customers, with the channel partners and the like, which you again use digital means. And the last is using digital itself in terms of transforming your business paradigm. All of this is absolutely true. So digital is becoming ubiquitous. And in order to reinforce that, what we should also be looking at, which I think the panelists should point out, is essentially look at operational resilience and cybersecurity. As you would know, with the increased use of digital, it is becoming, cyber attacks, and the ability of people who can hack into your systems and hold you to ransom is also increasing. How do you actually tackle that? Regulators worldwide are imposing more requirements to firms to strengthen the overall operational resilience, especially when dealing with cyber attacks. And this is happening in every part of the globe. As the case, the Monetary Authority of Singapore revised its technology risk management guidelines, as the European Commission or Digital Operational Resilience Act. The government of India is doing so much when it comes to, in fact, and I get notices from the government saying that you could also be subject to cyber attacks and the like. And I've actually been subject to some of these myself. So from my perspective, whilst you're actually embarking on this technology drive and having a glide path on and digitizing yourself and making yourself a lot more productive, you should also give a lot of emphasis on cybersecurity, which I think would define your ability to be a lot more resilient and be anti-fragile and bring in the confidence so required with the data that you supply to both the internal as well as the external world.
Great, and what a lovely discussion it was. And thank you, Mr. Ramanian. And once again, a very happy birthday, Mr. Parekh and Mr. Swaminathan, for joining us. And we are on time, and Bhavna, full marks to our panelists. Thank you, everyone, for joining us.
Thank you for the opportunity to interact with you all.